Live. Good morning and good afternoon. So today is Monday. The previous week we had Thursday and Friday dropping lower. So we're going to so you have this lows, yeah. So just below here we have the previous weekly low. And we also have this imbalance here resting here. So above here we have previous weekly high, which was Monday's high for the previous week. So price dropped lower and use this BC here as an inversion level to take price lower to this BC. So we're going to indicate the midpoint of this BC and understand what price is. So we've already traded down lower to this BC. So price used this BC here as an inversion level on Friday to take price lower on Thursday and Friday. So this is how we do the top down analysis from the higher time frames to the lower time frames. If you're watching this video, it's highly likely that you know how to do the top down analysis. Now on this set of time frames, I'm only looking for indications to support a clear order flow reading of price. Without that, I am not interested in taking any action. So I am only seeking to see price do what it means to do. So here you have this mitigation block. So price is mitigation these sellers here. So when they sold here and price went the opposite direction, when price chased back down into this other block here, their position will be mitigated. So we draw this out in time. So how was your weekend and how was your previous week? The previous week for me was hectic, super hectic. I had personal errands to run, a lot of personal errands to run. So for November, we opened here on a Friday. So November 1st was on a Friday, so we opened around here. So we're currently trading above a monthly opening price. Okay, that is being noted. For Sunday, we have this as the Sunday's opening. So we're going to make this tick a tick line and indicate this as the Sunday's opening price. Now, because we have a power speech that was released at 10 a.m., we would not be trading the ES for the money session because let me explain. When you have speeches like that, price will be going into a consolidation, and also the dollar will also be inside of a tight consolidation. So we've been consolidating around the Sunday's opening price. So the new week opening gap for Sunday's trading for this current week's trading is almost to none. So likely it will be a one-sided direction in price. So we're currently trading inside of the new week opening gap for this current week's new week opening gap, and also from the 20th to the 25th of October, the new week opening gap that was created on the 20th of October. So that's what we are currently trading inside of. Personally, I favor us going to this set of new week opening gap, this 5,800 level. So this is our joint liquidity for the week. So I would want to see our price, if price is still interested in buy side liquidity resting here, because I do not like these clean highs. These highs are too clean, and the algorithm doesn't like leaving clean highs like this. And you also have a BC resting above here like this. So we'd want to use Monday and tomorrow being Tuesday to scope the market and understand what the algorithm is trying to do for this week's trading. It is not wise to go into this type of trading and start picking a top or a bottom. You can use this kind of trading for a short term quick scalp. For a short term quick scalp, it is in fact okay. So trade to the midpoint of this week, this long week. Remember, the algorithm sees weeks as imbalances. I will explain the idea behind that as we continue moving forward. How the algorithm treats, how and why the algorithm treats weeks as imbalances. Because it's actually a quick explanation. So, when how an imbalance is always created, it is mostly created with speed when there's quick and fast accelerated move to a specific direction. That's how an imbalance is created, like this imbalance, like this. How this imbalance was created in a live body of price action, price was just going downward, lower, quickly. So this quick sudden move, price is only offering sell side delivery, causing pockets of price action to be left of buy side delivery, which is being unfilled. Now, in that same notion, this is how the algorithm leaves sell side. These are the algorithm leaves imbalances when it creates a week. So when the week was created like a bearish week, like a this kind of week, a discount week, for example. So this week now, for example, let's use this as a bone of contention. What we're trying to illustrate this exact week. So when this week was created like this, it was created with speed. So price opened here, traded higher, and then dropped lower quickly. This quick drop lower, it will be used to bring sellers at a lower price quickly, while it leaves an imbalance, meaning we've offered sell side delivery and price is lacking in buy side delivery. So that quick sudden move, when price offered sell side delivery, it will be lacking in it will be severely lacking in buy side delivery. This is why that the midpoint of that long week, any long winded week, is being seen by the algorithm as an imbalance. Are we clear? So continue. So we're currently looking at the day's trading, which is from today and yeah, close. So today will likely be a range day because we have these highs, but it's unlikely if we go to this high because of narrative. First, rebalance this imbalance here with this candle price trace to it here at 9 a.m. and 9:15 a.m. Then trace lower to fill this imbalance here, trading down to the discount week, to the consequent encroachment of the discount week. So we are watching price to see how it delivers. So I was 30 minutes late to this stream because the schedule was for 8:45 a.m. stream. So we're going to quickly look at the dollar and see what the dollar has been doing. So the dollar traded to its high here, to its buy side liquidity, which is this relative equal highs. After using this imbalance here as a resistance broken turn support to take price higher to these highs. So we are currently seeking these highs. So if you watch the previous stream, or I don't think the previous lesson how this joint liquidity was established was on a public stream. I think it was on the private settings. But nevertheless, the same number of you that are in the public stream, sorry, the same number of you that are in the private stream are also in the public stream. So it doesn't really matter. They are not really missing much because what was released in the private stream, you've you most of you have watched it. That is if you are in the private settings. So we have this highs here, which is also coupled with this imbalance here. This imbalance has been left here since the 7th of October, the week of 7th of October 2022. So we've only traded inside of the first quadrant of it. So if you take your Fibonacci and you delineate the quadrant of it, which is the 20%, the 25%, the 50%, the 75%, and the 100% of that quadrant of that imbalance. This is what I'm trying to drive at. So we only traded to the first quadrant of it, meaning price is severely lacking in buy side delivery in this imbalance here. So on a longer time frame, this is our draw liquidity because this is currently the 1 week, the weekly time frame. Price can quickly trade inside of this and fill this imbalance, this weekly CB in a one go. You can do this within days or in weeks. So it doesn't really matter. We don't care about that. We really care about understanding where price is trying to draw to next. And price left, or price leaves this breakaway gap. When this breakaway gap was created, it was left unfilled. And price created an imbalance here on Monday and then traded back down to it on Monday of the 4th of November's week. So we're going to look at the daily time frame. So on the daily time frame, we've traded to a John liquidity target. Remember, when you reach a target, you want to do nothing and allow the algorithm to tip its hand to you on where it is trying to draw to next. That's what you want to do. You must have specific rules to guide you in your trading career and every time you are approaching the chart. For example, if we are to trade currently, we are to trade we are to trade the courses because when the dollar is in a consolidation, the indices, the currencies which are inversely correlated with the dollar, they will be also inside of a tight consolidation. Those currencies will be almost untradeable. So if you are to trade, you have to be trading the courses, which is the exotic courses like the Great British Pound versus the Japanese yen, or the Euro versus the Japanese yen, the Australian dollar versus the Great British Pound, those kind of courses. So let's take a quick look at them. So I already have focused on trading currencies. So I'm going to look. So as time goes forward, we would also be analyzing the courses, especially during when the dollar will be in a tight range of consolidation. So during this time, we would be trading courses. So I just want to note that. So for a few of you that have been indicating for us to trade forex, so you're welcome. And now we can you can learn forex. It's actually the same thing. So I'm still trading the same model that I'm trading with indices. So price is price. Everything the algorithm does on one asset class, it also represents in another asset class. So we took out buy side liquidity here on Friday's trading, then dropped lower. I missed this trade because I was not trading Friday, but it is all good. There's nothing to complain. As long as we got to our draw liquidity target here, we are fine. Price is price. So we have this CB. So I'm going to draw the CB out in time. Inside of this CB, price has taken a short-term buy side liquidity, which is a minor buy side. We have this lows here. So we're already traded to this target here, and let's see if we've reached the midpoint of this from this liquidity pool to this sell side liquidity pool. When two liquidity pools are closely placed to each other like this, you look for the midpoint of it. Price will trade to the first quadrant and the second quadrant of it. This is for this is an exit strategy for partial taking. So if you're expecting price to come for sell side liquidity, you do not necessarily need it to come for this your sell side liquidity for you to take things off, for you to take partials. When price trades below this low, you take partials. As it trades below the 75% of this quadrant, you take partials. And when price trades to this 50%, you also do that. As you can see, sell price respected this 50% after trading lower just below it here, which is at a discount. So we traded from a premium to a discount. A premium which is a previous day's high, which is this. So on Thursday we traded to we traded above Wednesday's high, then seek lower prices. So I'm going to look at another course. So it's taken out buy side liquidity. We have this relative equal lows here, sell side liquidity. So price is coming for that low. So in 5 minutes, we'll be seeking price to trade to that low. Price trades to this imbalance here. So here we have the first target and the second target. So when you take the midpoint of this liquidity pool down to this where price is coming to for the pound Aussie. So if you take this the midpoint of this week, and also the midpoint of this week, okay, it is too closely packed by one another. So I'm going to use the highest body close of this swing point as a rejection block. So the open of this candle here is be looking at this side. Don't look at the price. Don't look at what the candlestick is trying to do. Look at the price here. So note the opening of this, which is 1.95266, and the close of this, which is the highest body, is 1.95266. So it's basically the same. So it started as a rejection block. seeking lower prices. So this is a factor of the rejection block that was indicated from the 5 minute time frame. This swing, the highest body draw that out in time, price traded to the rejection, then dropped lower, rejected lower. Now we have this other block. So we're currently trading from this bearish order block. This last up close candle. So this is the bearish order block. I want you to focus on price, how we are specifically focusing on price, what price is doing and how it is reacting until price comes to this midpoint here, this 0.5 level, which is 1.94977. I would not want price to trade above this rejection block, this swing high here. Price is allowed to trade to the gray pool here, but not above here. So I would want to see how it prints. So we left an imbalance here. We are going to take note of this imbalance here, which was created after price trades inside of this bearish order block on the 1 minute. Remember, this is actual liquidity. Why the courses? We are, as indicated earlier, if you're just joining the stream, we are looking at the courses because when the dollar is in a consolidation, the indices and the inversely correlated currency pairs will be trading also in a tight consolidation range. So we do not want to trade those kind of trading. So hence, we'll be seeking price to trade to equilibrium of this liquidity pool. The equilibrium of two liquidity pools is true fair value. This is why we're indicating this 0.5 level. That is why it is our joint liquidity. Price can come for the sell side liquidity, but we do not need price to come for the sell side liquidity to be profitable. So if you're trading from this bearish order block, this imbalance here, seeking this low, it's about, let's see, not wanting this imbalance here to be filled. So the invalidation point is this candle that created this imbalance. So you do not want it to be filled. So we put our stop loss here and target here. So it's about Xing 1 to get 2. So because of how the dollar is in a consolidation and all courses will be trading smoothly, this will likely and easily just draw to our joint liquidity like this. So we want to see how it trades. So here is the midnight open. So if you're just joining us, you cannot understand why we are currently looking at a forex pair. You'd have to scroll back behind and see the narrative from the starting from the indices, which is the US 500, down to the dollar, and finally here to the British pound, Australian dollar. How we anticipated a one-sidedness in this asset class because of what the dollar is presenting. So immediately we trade to this John liquidity. A lot of you, what will come to your mind will be, then what next? What next? That is, if you're having that kind of thought, that is one of the indication that you're an amateur. So that is an amateur style of thinking. They always want to know what next, what next, because we are going to get to this midpoint here. This midpoint, because this midpoint here is the midpoint between this sell side liquidity pool and also this sell side liquidity pool. This here is a sell side liquidity pool on the higher time frame. Let me indicate this. You see, when we trade to this sell side liquidity here and then seek lower prices, You shouldn't be worried about what the algorithm will do next. You should be done, like completely done with trading. You don't want to be worried about what will happen next. That is an amateur style of thinking. So if you have that kind of thinking, why I'm pointing this out currently now is because a couple of you and a few of you we have this what next thinking, and you want to be doing something all the time, all the time. That is trading is not a dopamine arena where you come to get your dopamine. This is business. This is war. So you just when you reach your target, your joint liquidity, you fold your kaya and you dip, take your profit and you dip away. That it is as simple as that. No ambiguity of what next, what is price trying to do next. That is not your concern. You're not caring about what next. You're only caring about as price giving me what I came here for. As price reached the midpoint of our sales side liquidity pools, as those criteria has been met, because naturally you would have taken partials when price got to this first sales and liquidity pool, seeking price to come to this midpoint of these two sales and liquidity pools. Price can come to this our final target, which is the sales and liquidity pools, but we do not need it to come to this sales and liquidity pool for us to be profitable. Does that make sense? So that is that. So anytime we're anticipating a consolidation in the dollar, would be trading the courses, but not on the same account. When I say trading the courses, I mean for the rest of you, it is tape reading the courses. So you shouldn't take this as a trade signal or something like that, because a couple of you will actually do that. Think this is a signal service and try to take a trade. So we have this imbalance here. We're allowed to come to this imbalance if the need be this imbalance here. So I'm going to draw this imbalance out in time. So we have this relative equal lows here. This is why this was indicated here. It's a short term buy side liquidity, because price cannot just be coming for sell side without taking out, without paying up buy side delivery, buy side liquidity. Sorry, liquidity are resting, buy side liquidity are resting buy stop orders on above the marketplace, above a previous high or relative equal highs. This would have been a 2 hour stream, but I was about 40 minutes late because of traffic. Real world, real problem. I'm not an AI, even though I'm trading with a logic that belongs to an AI. And for you and not for me. So that is something you'll be perplexed with. So we have this low. The chances for price to come to this equilibrium, this low here, it is extremely high because this is true fair value. Why is that? Ask yourself why this equilibrium, this zero point 0.5 level is of true fair value. why it is of a higher probability for price to trade to it. So remember what I said earlier. When price trades to your target, avoid the wanting to be saying what next. That's to be looking for a next dopamine hit. So we're going to indicate the midpoint of this week here because this now is a premium week. So price trades to the midpoint of it. Price trades to the midpoint of it here and then drop slower. Why did we indicate this here? This is a order block. This is an order block, which is a bearish order block. And because we have a long week like this, we're interested in the low of the week, the open of this candle, and the midpoint of it. Then we use it as a premium PDRA to seek lower prices because price has paired up buy side liquidity here with this relative equal highs here, seeking sell side liquidity with this relative equal lows here, which also corresponds with this drawn liquidity here. So we paired buy side liquidity here, which is a minor buy side liquidity, and then price drops lower, seeking this um, 0.5 equilibrium, which is of true fair value. I've in the previous video, if you've been following us for the past 6 months to 9 months or so, I've overemphasized on how and why the algorithm traced to the midpoint of two liquidity pools. If you do not understand the logic behind that, it's almost impossible for you to implement this logic for yourself because there's a lot to go, a lot that goes on behind the scene there. So we have this volume imbalance here. So I'm going to draw this volume imbalance out. I personally almost never use volume imbalance for entry purposes. I just indicate that in price to read order flow because volume imbalances are not actual PDRAs. They are not in the PDRA matrix. So if you are indicating the hierarchies of PDRAs, the volume imbalances are variables. They are how what English should I use? Just they are variables. That's the easiest explanation for me to explain it to you. How the volume imbalances act as variables. So the clear PDRAs are the fair value gaps, the other blocks. Those are the your clear fake PDRAs. So when price trades to this sell side liquidity pool, you would have taken partials below here, also taking partials below these lows and seeking why seeking these lows. So you should have your final position coming for this low, even though your dawn liquidity is this sell side liquidity. Again, you do not need price to come to your drawn liquidity. Your drawn liquidity is like a magnet. It's like a magnet. Join price to itself. When a magnet draws a metal to itself, it doesn't necessarily need to attach to that magnet. You can use the magnet to draw the metal before the metal connects with the magnet. You can detach from it. Am I clear? So you can detach from that magnet. So is this price. Before price comes to your drawn liquidity, which is this sell side liquidity pool here. Let's duplicate this. Before price comes to this your final drawn liquidity, taking this as the magnet with the magnet analogy, before price comes to this your drawn liquidity, you can in fact take out profit, portions of profit, trading from this bearish order block after indicating the rejection block. So you have a factor of a rejection block from the 5 minutes down to the 1 minute here. Price drops lower, creates an order block here. These two consecutive down close candle, but we're making use of this the last up close candle. Sorry, these two consecutive up close candles. I previously said down close candle. That was a mistake. So you have this volume imbalance. This is why I personally do not use the volume imbalance. You see our price trades multiple times inside of this volume imbalance here. I do not like to see these types of price action personally. I don't. That doesn't negate the fact that a couple of you will mostly get drawn to the volume imbalance. Do not use another trader's eye to to gauge how you personally view price action. So this here is a great pool, which is a midpoint of two imbalances. A midpoint of two imbalances. What were the imbalances these premium weeks? So you have this week and also this week. So price trades first time at 10:20 and also at 10:21 inside of this. All of this is being coupled with time. We are trading inside of a trading window when price goes into a distribution phase. All of this is the only reason we are being comfortable trading these types of distribution. It is because of time. At this time window, price has already done its manipulation phase, which is this. When price was going higher here, when price was going higher after 9:30, when price was creating this consolidation, then was going higher. All of this was manipulation, making bringing buyers at the higher price. When buyers come at the higher price, their liquidity will be used by smart money to facilitate their sell orders. So that their liquidity will act as a counterparty to smart money sell orders. For the market to be efficiently delivered, price must offer both buy side delivery and sell side delivery while pairing up buy side liquidity with sell side liquidity. Does that make sense? So that's the intricate nature of what price does inside of these candles. Okay. OBX crashed previously, but the trade didn't crash. So it doesn't really matter what OBS tends to do as long as the market exists without OBS. Does that make sense? So price is coming to these lows now. So I'm going to take out this grey pool, all of these imbalances, the midpoint of this consecutive encroachment, because it is currently acting as a distraction to me. So we're going to close the rest of the position when price trades below this low here and then call it a day. I hope you learned something from this video. and I'll talk to you tomorrow. See you tomorrow, and goodbye. Good trading. All right, so our target has been reached. We don't need it to come to our final terminus as long as we've reached our final joint, our final target, in which it was be explained for you guys here live. And if you have any question, you drop it in the general group and I'll attend to it. I'll see you guys tomorrow, same time tomorrow. So have a nice day and good luck, good trading.